That was a very nice, generous introduction. Thank you. We're actually going to start off with a little clip here, and then I pay attention to the platform that the grandpa is using. Technology.
Volume.
It's in German too, so you know.
Wie geht's eigentlich mit dem neuen iPad zurecht, was wir dir zum Geburtstag geschenkt haben?
Gut.
Mit den ganzen Apps kommst du klar?
Was denn für Apps? Geh mal bitte einen Schritt zur Seite. So, yeah, don't let your granddad play with your iPad. In all seriousness, my dad is 67 years old, and he just ordered himself an iPad, and I hope he doesn't end up using it as a cutting board. Let me tell you a little bit about my relationship with Apple. Jason read me back when I was writing for TheStreet.com, and I actually started with Jim Cramer back in 2000. And I was doing a technology, telecom, oriented talks and writings, and eventually I did end up starting a technology hedge fund in October 2002, right when the NASDAQ stock market bottomed after crashing 75% from 2000. And to this day I tell everybody it was the luckiest thing I ever did. I mean, the timing was perfect. And 11 days later the market bottomed and took off and doubled while I was managing money. And along there, March 2003, I was running a screen of stocks that were trading for less than the cash that they had in their, what I call their checking account. You can call it their balance sheet, but trying to speak to consumers at TheStreet.com, I would always explain it that, look, right now Apple has $8 per share in their checking account. And I can go buy one share of Apple at $7 per share. I get the company for free. If they earn anything from then on, I'll be paid. I bought Apple at $7, and I held it until I closed my hedge fund in October 2007, which happened to be the second luckiest timing I could have ever done, because, you know, we obviously popped and topped, and it got really ugly in 2008, and I happened to be talking about that stuff on TV and built my momentum because I was still talking about Apple, and of course, here Apple, I get to tell people, I bought Apple at $7 and sold it at 160, and I'm telling you, don't sell it, because the only reason I sold it is because I'm now on TV and I don't want to own stocks and be conflicted and all of that. But guess what? I'm here today to tell you, I still wouldn't sell Apple. I bought it back. I am now managing my own money and trading. I don't do TV anymore, and I'm able to trade stocks. And check out tradingwithcody.com. That's where I write about all of my trades, and I do analyze Apple repeatedly, and it's been my biggest position since I started trading again last March. And the point of the story isn't that, A, I was so smart. Part of it was luck, you know? I mean, that is, if I hadn't been managing money in October or March 2003, I wouldn't have had the chance to buy that stock at $7. Jim Cramer hadn't published some of my articles. Jason wouldn't have had the chance to read me, and I wouldn't be here today talking about all of this. So the point being, I've grown with Apple. Steve Jobs and Steve Wozniak, I'll talk a little bit about my problems with Steve Jobs, but for the most part, I mean, I revere and idolize and love the company and these guys that you're talking today. I can't believe that Steve Wozniak opened for me. All right, maybe not. I was really intimidated after seeing him talk. I mean, my goodness, his brain was just running like I couldn't believe. And I didn't build any circuitous stuff like that in my head before I built it on a board. That was an awesome talk, I will tell you. I've never seen anybody really blow my socks off quite like that. What I want to talk to you about today, though, is how Apple does get to $1,000. It's $1 trillion market cap that I'm talking about. This isn't something new. I'm not sitting here today. It's actually not nearly as shocking to say it today. Now it's at $600. I think when Jason and I had first started broaching the topic, it was probably around 300, and it sure was sort of cool to say, hey, it's going to triple in the next 3 years, and it was a little more outrageous. $1,000 still sounds a little bit outrageous. $1 trillion market cap has never happened. There's never been a $1 trillion market cap in the United States for sure. China, you can, it's all fraudulent over there anyway. But here in the United States, Cisco hit 500 billion, and that was the top. Exxon, I'm sure you guys have heard, hit 500 billion, that was the top. And that was a big alarm, right? When Apple hit $500 a share, a $500 billion market cap. How can it possibly keep going up? And that's what I'm here to talk to you about today. And that's actually tied back into the clip I showed earlier. The whole thing about Apple and why it's been so successful is the platform itself. And it's not the cutting board platform for your vegetables, but it is that ecosystem that we've talked about endlessly here. And that is the driver. It's the platform, it's the ecosystem. Once you create a platform that then hits critical mass, which the iPod did, which then, of course, sort of opened up the potential for what I used to call, eventually I'll have an iMini MacBook Pro in my pocket. That was the iPhone I was picturing. Obviously, I didn't know it looked just like that or anything like that, but that is what we have in our pockets today. We have an iMini MacBook Pro that does more than my mini MacBook Pro did 3 years ago. And that platform is where the growth comes. I was at Century City after I got here in LA and meeting a friend for lunch, and we toured the Microsoft store, the Sony store, and the Apple store. And we started off at Apple, because we're Apple people. And the store's packed, first of all. And then there's so many products that Apple is selling that are not Apple products, that are built upon the platform, whether it's the Mac platform, the iPhone platform, or the iPad platform. It's now a general Apple platform. The ecosystem doesn't need to be separated. The things you're using on your Mac, you get a text, you get an iPad, that iPhone, it becomes an overall platform, that ecosystem that we all use. And that's where the differentiation, that's once they hit that critical mass. Once all of you are using iPhone and iOS and iPad and Mac, then guess what? The developers, we just heard them talking about the same concept. It's the positive feedback loop that happens once you get critical mass on either the consumer side or the developer side. Can't really differentiate the two. It becomes a positive feedback loop because the more consumers you get, the more developers you're going to get, the more consumers will come to your product. If there weren't a million apps already, the iPad would not be as successful. But the fact that you can go buy a barbecue thermometer wireless app thing that you put into your roast beef when you put it in your barbecue, and you're sitting inside reading your New York Times app on your iPad, and it, boop, boop, temperature alert. That is an application I never would have thought of, but it has been built upon that Apple platform. So by creating the platform that then hits critical mass, that then gets more developers and more users, it becomes unconquerable. It becomes something that can't be touched. It becomes something like that Wintel monopoly that you saw in the 80s and 90s that drove stocks like Dell and Microsoft up tens of thousands of %. What ends up happening as you all start using more and more Apple ecosystem products, you are locked in then to Apple. You heard Steve Wozniak talk a little bit about how they're a little more closed today than they were a few years ago. That is one of the most important parts for you as an investor. As a consumer, I hate it. I just want to be able to open it up and not have anything locked and do whatever I want. But Apple, as the selling all of those services, all of those applications, all of those games, all of the movies, everything you're buying on that Apple ecosystem is going to go up in price because there will be less competition. You can't leave Apple. You're locked in. Nortel and Lucent used to do this to the AT&Ts and Ts and Verizons, and now we see Apple doing it to you and me. As an investor, I'm great with it. Obviously, as a consumer, I don't want to be locked into Apple forever. Tough. What happens, of course, too, as you guys get locked in, and now used to charge you 99 cents for a movie, or Apple used to pay 49 cents for a movie, but those guys who make the movies, they need Apple. They need the platform. They need the consumers. They need you to have access to their content. So guess what? Apple's going to be able to negotiate a little bit better deal. You heard earlier the guy speak before me talk about how Apple and Google and Microsoft and a lot of other companies are going to be able to pay infinitely more than Netflix could ever pay for content. You can't compete with the $100 billion that Apple now has in its checking account. And that becomes a bigger critical mass. That becomes a bigger positive feedback loop. And margins for Apple go up because their costs go down, because they're not only going to be able to pay more if they need to, but the studios are going to need Apple. They're going to need the iPad. They're going to need the iPhone and those consumers, so the margins go up, the costs go down, they can charge you guys more because you can't leave. And guess what? You know, we're sitting here talking right now about Apple doing 30, 40%, 50% margins. Cisco does 66% margins, 70% margins. Microsoft, when they used to just sell software, did 95, 98, 99% gross margins. And the earnings that come from margins are really the key here. And that's, guys, we look at growth and we look at the potential for Apple to grow that top line. But the top line away, look at the earnings. And this comes down to how we get to $1 trillion and how we get to $1,000, $1 trillion market cap, $1,000 stock price. Because do you guys happen to know what Apple's multiple is right now? So yeah, you know, depending on whether you account for the $100 billion they have in their checking account, you subtract that out from the multiple, but it's somewhere between 12 and 15, 10 and 14, whether you're looking at this year's numbers or forward numbers. That's about equivalent or even less than the broader market, the S&P 500. And Apple's growing faster than the S&P 500. We know that, the top line. How about the bottom line? And that's really what drives stocks over time. It's not necessarily that Apple's going to $600 tomorrow, or I don't even know where it closed today, but the iPad 3 came out. News is here. Maybe we get a sell-off of the news. Those types of things might happen. But over time, Apple this year is expected to earn 40 to 50 bucks a share. Next year, we're looking 45 to 55 bucks a share. And that's the mainstream analysts out there looking at those numbers. Let's just say it's 50 bucks a share. Let's say the multiple expands to just 20. That's $1 trillion market cap. $50 per share in earnings for Apple times $20 a share, times a 20 multiple will put you at $1,000 per share. That's next year. I mean, as I prepared for the speech, it actually shocked me because, again, I thought I was being a little bit outrageous when I said, hey, Apple's going to $1,000 by 2015, when the stock was at 200, 250, 300. And now here we are. It's 2012, and there's no reason that we couldn't have a 20 forward multiple X cash with a $50 per share earn time. They're gonna meet that. They'll do 60 bucks next year in earnings. So, you know, even just look out 1 or 2 years past that, 2013, 2014. How about this, guys? I'm gonna go ahead and give you a headline. I'm changing my price target. We're going to $1,500 by 2015. It's not even a joke, though. 2015, Apple's gonna earn $80, $90 a share.
200 million.
Give me a market cap on that. Give me a multiple on that. $90 a share. I mean, heck, at 20 times, that's 1,800. At 15 times, we're already at 1,400, 1,350, whatever that number would be. It's rounding error. Get to 1,500, it's 10% move from there. You know, that Apple did that yesterday. I don't know, guys. The idea that Apple goes to $1,000 should be shocking. The idea that we have a $1 trillion market cap company, that any company in this country is worth $1 trillion should blow your mind. But it's happening. And you're here, you're at the Apple Investment Summit. I sure hope this isn't the top. I mean, talk about a great top tick indicator. I was just flipping through a magazine, the Forbes Billionaire magazine the other day, and you know they launched that the first time 2 weeks before the October '87 crash. Do you know that I got my TV job at Fox Business? Rupert Murdoch launched a Fox Business television network 2 weeks before the stock market topped in 2007. And I sure hope, Jason, we're not top ticking Apple. At some point, obviously, Apple's earnings will slow down. At some point, the multiple will actually contract. At some point, there will be a competitor that is faster, more nimble, that is going to revolutionize things like Apple did, starting with their iPod. That's not today. I don't think it's the next 2 or 3 years. I like to tell people that I look into the future, and within, I don't know, 5 to 10 years, I'll be watching season 6 of Lost Returns on ABC by telling my little USB-sized pocket thing to go, like Steve Wozniak said, hey, I want to watch Lost Returns. Put it up on my teleportal just like they have on Star Trek, and now I'm in my whole little, the teleport room. Do you remember that? What's the actual word for that?
The holodeck.
Holodeck. That's the word I'm looking for. The holodeck. I'm going to have my own holodeck in my living room in New Mexico. Why not? Apple's taking us there, and when they get us there, the company's going to be worth more than $1 trillion. It will be the first company to do that. I do think it's not a zero-sum game. Google's going to be there. Google's going to eventually go to $2,000 a share, and I don't know if it'll quite get to $1 trillion market cap, but it's going to get close. Microsoft isn't dead, guys. Microsoft probably going to 50, maybe 100, 5 to 10 years out. Microsoft's still going to be there. They'll be a player. The mobile strategy obviously going to have to get dumped and written off and revamped and all that stuff. But we are going to be using Microsoft in our living room, in our cars, all over the place. And they'll have apps on the iPhone that you're going to use on your little USB port. Before we go to questions, I have no idea how my time's looking. Not like that. Am I still about 10 minutes before questions? Okay, good. I want to talk about some of the risks with Apple, because that's, we're all sitting here and every talk I've heard has been sort of like mine. It's a no-brainer to buy Apple. But let's flip it. That's one of the things I trademarked a long time ago when I was writing for Jim Cramer was, you always want to flip everything upside down. Any conventional wisdom, anytime you're at an event like this, you do need to think about whether this is a top indicator. Are we top-ticking Apple's market cap and stock, and this is truly as good as it can possibly get, because we're all here high-fiving each other about how unbelievable Apple is and how genius we all are because we were smart enough to invest in it at some point. And that's not the case, guys. It's a lot of luck, a lot of timing. Apple itself, their business itself, their models themselves are partly as, you heard a question to Steve Wozniak earlier if you were here, how Steve Jobs admits that some of it is flying off the seat of his pants. And how much of that is really true? Did they luck into the iTunes? Did they luck into the iPod? And they were able to be smart enough to take it to the iPhone platform, and then they were able to leverage that and the apps and the critical mass that the iPhone was hitting to turn it into an iPad. But some of that is truly luck. And we all here are sitting rather lucky for having been a part of this ecosystem and the investment idea behind the ecosystem along the way. But there are risks, guys, and I think one of the latent risks that is never talked about, I've never heard anybody mention this, even when it was a headline and I used to talk about it, Steve Jobs and the Apple board backdated options several years ago, took billions of dollars out of my pocket as a shareholder and the rest of your pockets as shareholders by misleading you about the number of shares that would be outstanding if the stock went up 1,000%, which I believed it would. And I wouldn't have been okay with them later coming back, as they did, and saying, hey, we misled you. We told you that we issued 100 million shares to Steve Jobs at XYZ, but it was actually 150 million shares at XYZ minus 50%. And that changes the entire investment profile as an analyst. I need to know how many shares are outstanding so that I know what the value of my individual share is. I need to know how many potential shares there will be outstanding. And that, Steve Jobs got away with it. There's never been any prosecution, never been any actual even investigation to any of this. But there are risks from that coming back. I don't think that issue is entirely resolved. I do think at some point we have to have some justice. We have to have this brought out, if nothing else. And I do think the stock could take a hit at that point. I don't think that this is on anybody's radar, but within the next 2 to 3 years, maybe, someone actually does, this becomes a backlash. And that leads me to my next risk, and this is by far the biggest risk here. There is an anti-Apple backlash building. We're all here high-fiving each other, but there are a lot of people that are really mad about Apple and what they're doing in China, and they can justify it all they want, but there are people in China making pennies per day, living in squalid environments and really an awful, awful place. And the Chinese government is subsidizing that with taxpayer money, and you as a shareholder of Apple benefit from that. And we need to address that. It's not okay. I don't know how we resolve it. I do think that prosperity comes by building businesses and interacting with China and the United States. And I do think that Apple should be outsourcing and going global and anything they can, but it needs to be moral, it needs to be ethical, it needs to be based in some sort of a system that makes sense to us. And I do think there's a major anti-Apple backlash that's rooted sort of like in the Occupy Wall Street movement, that same mentality. They're coming for Apple. There's going to be demonstrations from the Occupy movement this summer against Apple and the earnings that they're generating and the power that they're creating. And those are risks. I certainly don't think the Republican-Democrat regime, as I like to call it on Fox, piss off my bosses all the time, but I don't think they're going to actually fight Apple or anything. I don't think we're going to see any enforcement or any real government movement. But the consumer side of things, there's a movement out there that's angry at Apple, and there's definite justification for being angry at Apple, and even us. We're benefiting from people living in working slave labor, and that is true. It's we can justify it all we want. And yeah, maybe it's improving their conditions over time, but what about tomorrow? What about this year? That stuff needs to be improved fast, and it might take some of the money out of our earnings potential. Those are your risks. That, without a doubt, I think is the biggest risk. And the entire concept of an anti-Apple backlash, a lot like what you saw with the Microsoft backlash in the late 90s. It's a risk. And Google makes great products, Microsoft makes some good products, and there are alternatives. I'm going to flip my theory earlier about lock-in and how safe Apple is because you guys have to use Apple. No, you don't. You know what? Yeah, you've invested thousands of dollars in Apple, but at some point you might decide there's a better return because it'll save you thousands of dollars to use a different system. And those types of things are out there, and we need to be aware of them as investors. I heard someone earlier say, too, that they had sold every stock they had and put it all in Apple. And I don't think that's a good idea. I would never do that personally. I own stocks, but I'm diversified among 10 to 15, sometimes 20 different stocks. I'm an investor. I've owned Apple forever. I don't plan on selling it. But I'm worried, and I know that there are risks, and I know that we need to be aware of those risks because it's not going to go straight up. You'll have a 10, 20% pullback, and are you going to be freaking out? Or are you aware that, hey, this can continue down? Are you going to be okay? Do you know whether or not you'll survive if Apple does go down to $200 a share again? Because it can, guys. And we can all high-five each other all we want, but there's risks, and that's the bottom line. Again, on this tradingwithcody.com thing I write about all the time, we had a get-together last night with some of the subscribers here in LA, and without a doubt, my biggest concern walking out of there was that everybody's feeling too good. Making money sucks. It's hard. It is really hard to trade and make money consistently, and you're going to lose sometimes, and you might be in a 6-month bear market coming right now because we just top-ticked it by having the Apple investor side. But those are the risks, and I was concerned with so many people talking last night about just depending on trading and even expecting Apple to start issuing a dividend. And I expect a 2% dividend next year, but I don't know if it'll come, and I'm not going to count on that. And I guess that's my final point is, guys, don't count on Apple. Yes, I think it's going to 1,000. Yes, I think it's going to 1,500, but there are risks and it's going to be tough to get there. And so, just buckle down and be aware. I'll take any questions you guys got.
Online, I'm known as Sacto Joe. Some people might know me. One or two. I disagree with you about the Wall Street issue. And I'm a liberal. Excuse me. So I don't want to get into that, and we're not going to argue about it, but I just want to make that point.
What Wall Street issue?
The Wall Street, the Occupy Wall Street.
The anti-Apple
Yes,
backlash.
I don't agree with that.
Okay.
But I don't want to argue it.
I think it's a risk.
I know, but I don't want to argue it, so I just want to say I disagree. Okay, leave it at that. Two things. One, rather than law of large numbers, it should be called obsession with large numbers. Okay? It doesn't exist. One of the speakers pointed out it's not even the right law. If you look up the definition, a number's a number. It doesn't matter. Okay? A trillion, a billion, whatever. Doesn't matter. Apple could go to 5 trillion. I don't think there's anything that stops it, honestly. When? No. Who knows?
And guys, I'm telling you, as a trader, as an investor, and I appreciate the interaction here,
Well,
but you scare me. That mentality,
I hope to.
that right there
Because-
scares the hell out of me.
Because
Apple getting to $5
the
trillion
reason I
would
should
be
scare
a
you, the reason I
miracle.
should scare you is because 3 years ago, I said Apple's going to 1,000, and my wife will back me up that I said that.
I believe you, but that doesn't mean that it's as easy to get to 5 trillion as it was to get to 1 trillion. That's my point. It's a huge risk to go from the trillion to 5 trillion, and we shouldn't all
It's
just sit here and be
nothing.
like,
It's
guys,
no. You're
roll
wrong.
along.
You're wrong because $1 trillion means nothing. $1 trillion 50 years ago meant something different than it means today. Okay?
Yeah, ask your question if you don't mind, please.
Well, okay, that was first. The second point is that a walled garden is not necessarily a bad thing. And I think you think of a walled garden as a bad thing. I think, I actually like the term. I think Apple's walled garden is like the jungle's out there, and here we are in the garden. Would you agree, please, would you agree that the walled garden is a good concept?
As an investor, it's a great concept.
No,
As
as
a
a user.
consumer, as a user, I think it's a horrible
Okay, I
concept.
disagree.
And that's fine, and that's why Google is an alternative. And yes, it's a little bit of a walled garden too, but it's a more open alternative to Apple. And there are consumers out there, and I think that anti-Apple backlash will feed right into, an Android movement.
Well, thanks for bringing up some of the risks. I have been concerned, as you have, that all I'm hearing is positives since yesterday. And I am very positive about Apple, but I also get concerned when I only hear positives. But I'd like you to expand some more on what you see are the risks. I know you mentioned about an anti-Apple backlash, but that's kind of a little fuzzy. How about some more concrete risks?
Yeah, some more fundamental, perhaps.
What about risks from Android? I mean, I know Android is not in the same quality and position or ease of use and attraction and fit and finish and aesthetics and all of that as Apple is. But I see a lot of people using it, and I see that the numbers that are selling are very large. So is there a possibility at some point people say, well, iPhone is great, we've been there, done that, and but I'm not going to spend $200 more.
I do think the lock-in aspect and the familiarity that we all develop with the great Apple interface systems throughout the different platforms keeps us coming back. I don't think most of us want to go learn how to run an Android, even though it is incredibly easy and similar to Apple. There are nuances to it that are different, and it drives me crazy when I flip back and forth from my Android to my iPhone. And for the record, my iPhone, I'd never want to open that Android. I hate the Android, but my main number's on the Android for whatever reason. It's been there for years. And AT&T, I didn't want to go to AT&T, so anyway. There are risks certainly to the Apple, to the iOS and from Android and even from Windows. I don't think we should write the Windows mobile platform off entirely yet. The Lumia from Nokia and all of that stuff is, it's not been very good so far. But that doesn't mean they're not actively out there trying to figure out new ways to do it. And by the way, I do think the idea of Kinect and motion sensor is coming to the Microsoft mobile platform, and that's going to be an advantage that Apple won't have. I don't think it's much of a risk, though, overall. The point being, look, you saw a graphic for the guy who came up before me earlier, and there's going to be 1.6 to 1.7 billion handsets sold around the planet this year. 1.7 billion handsets, and Apple right now is, at the end of the year, will probably be about 10% of those. His numbers are less than 170 million, but I think Apple will probably sell 170 million units of their iPhone versions over the next year. 1.7 billion, and only 600 million this year will be smartphones. There's still 1 billion cell phones that will be sold this year that are not smartphones. And so one of the most important concepts that I used to write about at TheStreet.com was secular versus cyclical growth. And, if you get a booming economy, you try to catch the cyclical growth. Apple is a secular grower, and the smartphone industry is a secular grower. It's not dependent upon the economy. This year, there will be more smartphones as a percentage of the $1.7 billion market, which is cyclical, sold. Smartphones is a secular growing industry inside of a cyclical industry called cell phones. So the smartphone itself is huge growth ahead of it. We're going to do 1 billion smartphones in 2 years. We'll do 1.5 billions, and within 2 to 3, 5 years, I don't know, there will be 2 billion smartphones sold. Apple's still got 25% market share. You're going to be, how about a $5 trillion market cap? Just kidding, but no, it could go up.
So those are some of the risks you talked. The risks you're talking about are, for example, you said Windows and Microsoft, but that's not here today. So what are the risks here today? I mean, I don't want to talk about risks that could come up in the future. Tell me about the risks here and now that you can see today.
Fundamentally, and this is going to scare me to even say this, but fundamentally, the economy, I think, is set up for the next year or two, at least, bumble along with a little bit of growth and not freak people out. We've kicked the cans of sovereign debt crisis and all the other debt crises down the road for at least 2 to 3 years, and then we'll address them again. Apple itself, the iPad, the iPhone 5, or the new iPhone, those products are going to be coming out. There's more apps coming out. There's more content coming out. Over the next year or two, fundamentally, I don't see a problem with Apple. Certainly, you can have a market crisis, you can have a market crash, and certainly you could even have an anti-Apple backlash that reduces the multiple that people are willing to pay for Apple, and the stock goes down to $400 a share, even though, it's going to earn $50 this year.
Okay. All right, thank you. So not too many risks that you see at the moment.
Zing, zang, zoom. Touche.
I have 2 questions. First is about market cap. You said something about Chinese companies being
mostly fraudulent. I was somewhat being tongue-in-cheek, but I personally never invest in a Chinese company or even any foreign company because it's hard enough to trust the system that I've learned here in the United States, and I just don't think it translates well.
Well, there was a study in The Economist about Saudi oil companies, which are monopolies, being 10 times the size of Exxon. So they are.
Fair enough. And that's I did sort of say that there are probably $1 trillion market cap companies out there. I don't necessarily recognize them as such simply because I don't believe the Saudi numbers. I don't believe the Chinese numbers, and they can call it $1 trillion, but it's fraudulent in my mind.
Okay, my second question has to do about the antitrust risk that might come as being
That's a great risk. I wish I brought that up, yes.
Do you know anything about this, or have you analyzed this?
You saw the stupid antitrust little thing they did against Amazon and Apple and a few others the other day, which was somehow they're going after, some sort of collusion between Apple and Amazon for keeping prices too high for digital books. And there's stuff to go after Apple about. There is definite better movements than the burgeoning e-book debacle or crisis or whatever they're pointing. Yeah, I mean, just the sheer market power and sheer size that Apple has, you know, it brings the targets and it does bring increased risk of regulation and Apple needs to be careful that they don't end up doing what Microsoft did in the late 90s, where they're so arrogant that they thought they could just destroy everybody and end up owning the markets, and the government itself said, guess what, we still have some antitrust laws in this country which we enforce, which shocks me because too big to fail banks are way too big. All right, last question.
Thanks, first of all, for talking some about the risks. I think that's a good thing to do. One of the things that I've always felt about Apple and seen is that I believe that Apple has a premium that's due to aspiration. It's an aspirational brand. People have always wanted to own it.
People pay a price for the product,
They'll
a
pay
premium price.
for an
Yeah.
aspirational brand. But I think also one of the characteristics is that as aspirational brands get bigger and bigger and bigger, they tend to lose some of their aspirational appeal.
Sure.
So I'm wondering, do you think about that at all? Do you think about it in relationship to Apple? And is it?
I think there's such the dynamic those dynamics I was talking about earlier, where I'll just break them down one more time. Create a platform, hit critical mass, creating positive feedback loops, makes you lock in, and there's the answer to your question. I feel like we're already at the lock-in phase. Apple's hit critical mass, they've got the positive feedback loop, and they're locking us in right now. And so, yeah, certainly there are risks. I feel a little bit like Steve Wozniak, because after talking this long, I think I forgot your question.
It was really about the aspirational aspect of Apple as a brand.
It's still aspirational in many ways, but I agree with you that anything that becomes mainstream loses the niche appeal, because then everybody's got Apple. And yeah, we're here, but we're already locked into it. So I don't, lots of risks, but I don't think the aspirational backlash is necessarily one of them. And I'm sorry, man, they just told me I gotta wrap it up.
Give him his compliment.
It really was, because I was going to ask the question about the children, and that bothers me because I'm hearing it. And I want to thank you for bringing that up. But beyond that, I wanted to ask you if you would use your platform, because you reach so many people. Because I think the way to solve the problem is we have so many people out of work here in America that I don't like hearing little children over there that are working under slave labor. And if they're little children, they're not very educated over there. They certainly could be brought back here, those jobs, and putting Americans to work for the money that consumers are spending in America, and that would be a positive PR switch for Apple to turn the whole thing back around.
I don't disagree in concept, but I will just say that's going to hurt Apple's margins and hurt us as investors. And those are, again, that is by far the biggest risk in my mind, is that I don't think paying slave labor rates in China is sustainable for the long term.
Exactly.
2 to 3 years maybe, but there is an anti-backlash against that, and that is scary.
Yeah, well, that's
And
what I'm saying.
I will continue to discuss these issues. I don't have an answer. I want Apple to be global, and I want them to be doing the right thing, but they need to choose to do it on their own, and the government needs to enforce the laws and all of that stuff, and I'm just one guy with a little voice.
I just kind of feel like if we put more Americans back to work, they're earning more money, and they're going to be happier, and they're going to be buying more Apple products, so it could be a positive.
Henry Ford in spirit. Thank you so much, guys.